The Fed's own deep throat kills the bull rally. That's coming up on 3 Minutes on Markets and Money. Yesterday, the market took a pretty decent tumble, going back below that 200-day moving average as comments from Nick Timiraos, he's the Fed's own deep throat, as they say, came out and made comments suggesting that the Fed may not only hike rates more aggressively, but they are in no shape or form anywhere close to a pivot or a pause in their monetary policy. Again, they are going to slow down rate hikes. We all know that. But now even talking about potentially more rate hikes in 2023, that sent the market lower, particularly as the fact that, again, at this point, markets have been rallying on the hope of this idea of a pivot or a pause. That is not in the cards anytime soon. Today's blog post on our website, realinvestmentadvice.com, is entitled "The Bull Case Has Two Problems," talking about the Fed and the Fed. The fact is, the Fed is still hiking rates here, and they are still reducing liquidity by doing quantitative tightening. This whole rally was based upon the premise that the Fed was going to pause. They were going to stop hiking monetary policy. That is clearly not the case at this point. We've been talking about taking profits, raising cash levels, and reducing risk in the portfolio. The downtrend line that goes all the way back to January remains very much intact here. That resistance still holding at every level. More importantly, our MACD sell signal is very close to triggering. Now, it hasn't done it just yet. The market will need to rally fairly sharply today to keep that from occurring. It doesn't look like that's going to happen. Markets are looking to open fairly flat this morning. But again, as we start to look forward to the meeting next week of the Fed on December the 14th, I would expect a much more hawkish tone from the Fed coming out of that meeting, because Jerome Powell does not like these rallies. It eases financial conditions, which is working against exactly what the Fed is trying to do. So next week, expect much more hawkish language, potentially even talking about another 50 basis point rate hike at the February meeting. That's something the markets have not factored in, and they have not factored in interest rates above that 5% Fed funds target level, which now may be increasing also because of recent data. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll see you next time. Today's article on our blog, today's blog article,